My people, welcome back. Today we are talking about China. We are talking about Alibaba. The second purge of 2022 has happened. Alibaba's not at 100, it's not at 90, it's at 80, close to those yearly lows. And in today's video, we're going to talk about China's recent macro situation, assessing China Tech's near-term prospects. We'll discuss Alibaba in conjunction with the other top stocks inside the KWEB. We'll do some inter-company, inter-sector analysis to gain an edge. And then we'll discuss what we've been doing inside our community on China and the US. If you're new to my channel, my name is Larry, and I talk about US and China macro investment strategy. Make sure to subscribe, turn on the bell, and press the like button if you enjoy this video. Now, there are two brokerages that allow you to access the Hong Kong listed market if you are concerned about delisting. One is Interactive Brokers and the other is Moomoo. Interactive Brokers, they've got the best low margin rates across the industry, and Moomoo offers my friends free stocks in the link in the description below. They've got great analytics and research information on their platform. Now, I want to take a second to just give a quick recap. In my latest public email note sent to all friends on my list, I said that I was not convinced that all these speculators who are buying put options on the S&P 500 at the yearly lows, that they would have a big payday. I was not convinced, aka I believe that new bears would get burned. And I said, would new bears, would they get rewarded by buying put options so close to the lows? I said this transaction is far more reactive than proactive. So is it the best move? I don't think so. I talked about that this past weekend. Hopefully this helped some of my friends here prepare. Now, inside my investment community, I discussed the importance of the S&P 500 3636 level in mid-September when we were still at 3850. This was in mid-September. I said, if we get back to those lows, 3636, and the RSI is under 30, there's a good chance that we can make a 5-10% counter trend rally back to 3750, 3900 before retracing again. And that looks like what we're seeing today. I believe the road for Chinese internet will be bumpy, and we will need extraordinary patience with the sector before big progress is made. So on a serious level, please be careful. There is a de-risk entry, but you have to be careful, okay? Now let's talk. Guys, there's no shortage of bad news in the marketplace in the US. And there is no shortage of bad news related to China either. And because of that, Alibaba, which is the proxy for Chinese consumption, now sells at 10.8 times forward earnings. And by comparison, the S&P 500 has around a 16 to 17 times forward multiple last time I checked. And this year, because of China's macro issues, all the ETFs across the board related to China are down 30% plus. But this leads me to the most important part of the information that you want to understand. What are the things that we need to look for in order to see the outlook fundamentally improve for China? Now, let's start off with macro and then move on to company-specific considerations, because it's all about macro at the beginning. You see, China is stuck with its zero COVID policy because of weak vaccines. Now, I'm not sure I completely agree with the title, but what I will agree with is there is a substantial portion of China's elderly population that is not vaccinated, and because of that, the healthcare system would get overwhelmed if there is a large COVID surge. I'm not sure if it's because of weak vaccines. Anyway, this is constructive news potentially happening. China and India approve new nasal COVID vaccines, potentially a game changer compared to the current vaccine solution from Sinovac. Now, here's the more important development. This is recent. A lot of people aren't talking about this, but if this comes to fruition, this would be very good news. Moderna is open to supplying COVID vaccines to China, their CEO said. As of now, China has really been reluctant to accept foreign vaccination. If Moderna and China find a way to partner up together, this could be very good news for the future of the zero COVID policy in terms of relaxing it. So this is something I'm definitely following. There are also slight signals that China is becoming slightly less hawkish on the regulation. Let's take a look. We can see here that Hong Kong, they're lifting their hotel quarantine. And because of that, this could provide a map of how mainland China is going to run their zero COVID policy in the future. And there's also signs that the special administrative regions of China, like Hong Kong and Macau, are starting to open up. If you follow the casino industry closely, like Wynn Resorts, after Macau indicated that they would be relaxing their zero COVID policy, Wynn Resorts soared 10 to 15% in one day. This is a sign of what could be coming for the Chinese internet sector if the zero COVID policy starts to get relaxed. If it's not relaxed, then you're not going to see that bounce. But if it is relaxed, we're talking about a 25% repricing on the upside if that happens. If that happens. Big if, IF. Also, we're seeing gaming approvals starting to come through. We're seeing that Tencent, NetEase, they have certain games being approved. That's a step in the right direction when it comes to business regulation. Another sign that peak regulation may have come is that live stream star Li Jiaqi recently made a reappearance on social media. This is rather significant because several months ago, Li Jiaqi instantly disappeared from social media after he was filmed with a cake that had the appearance of a tank, and it had a resemblance to the Tiananmen Square historical event. And he's been off the grid for several months. The fact that he's back could be a slight signal that peak regulation may have come. I watch all the tea leaves of China. Sometimes you have to look at various different aspects to understand how political leaders are thinking. But in terms of the monetary policy, one trend is clear. China is in QE mode. US is in QT mode. If we take a look at the M2 money supply, China is continuing to increase liquidity in their economy while US is tightening. So because of this, China's economy is beating expectations in a range of areas. And this is important to follow because eventually stronger economic data is going to result in stronger stock prices. Now, before we get into the company-specific considerations of Alibaba and the other companies I'm going to discuss, I want to take a moment to talk about today's sponsor, Tigerway, which is an educational program that I personally lead. Tigerway is an SAT prep and college consulting admissions company where we help students score dramatically higher on the SAT and help them position themselves for top 30 US admissions. So if you have a sibling that's currently in high school, this message is going to be highly relevant. Now, pre-pandemic, my program was locally famous in Boston. We were featured in the Chinese English newspaper. Now our program is completely online. We help students along the East Coast of the US. We help students along the West Coast. We have some students from the Midwest as well, where we help students in our group and one-on-one coaching programs. We've helped a lot of students get into the Ivy League schools, top 30 schools. Look, I understand that a lot of my viewers may not believe that a top school or pedigree is incredibly important. And I want to wholeheartedly say that it's not about what school you attend, but how you do there and how you take advantage of the opportunities. It is just that there are a lot of people who want to enter top-ranked colleges, and for those families and students, we help those students succeed. So on our program email list, tigerway.substack.com, we share hot tips of college strategy, admission guidance, a preview into what we do inside our program. We also talk about SAT outcomes. You can see here, we got several tremendous results from the August SAT. Students and parents text me directly after outcomes are released. So make sure to be on our email list, tigerway.substack.com. So if you have a sibling or a son or daughter in high school looking to get accepted into a top 30 US ranked university by having stronger grades, stronger SAT scores, and a stronger extracurricular profile via via thoughtful planning, our program can help. Take a look at the links below. You can learn more about us, see our outcomes, follow us on social, and even schedule a call with us if you want to learn more. With that said, let's get back into the content. Now I want to discuss the company-specific considerations. It's very important to understand the entire landscape. We're going to take a look at the KWEB ETF constituents and also the constituents inside the iShares MSCI China ETF. And from doing this, I've broken out the Chinese internet sector and broader Chinese stocks into several theme baskets: the consumption trade, the advertising trade, the real estate proxy trade, the travel trade, and the broad financials trade. The reason that you want to break it out into theme baskets is that even though there's a high correlation among all of these companies, based on the macro setup, there could be certain alpha to be found, and I'm going to show you some examples soon. So here are some likely macro outcomes based on my current understanding of China. Let's talk about zero COVID. At some point, due to the nature of COVID cases will fade and commerce will resume. That said, I think that China's healthcare system capacity does not allow the country to fully eradicate the zero COVID policy without a stronger vaccination strategy, which is why Moderna working with China directly would be such a major positive catalyst. Now let's talk about international travel. This one is a little bit easier to forecast, because at some point, China is likely to open its borders again to international travel. Hong Kong and Macau are signs of this. So there are implications for certain companies inside the KWEB ETF, which I will talk about shortly. On business regulation, the government is likely to hold their current regulation landscape to be a bit more stable so that they can stabilize their GDP, but a full return to pro-growth policies is unlikely. That is because Xi Jinping, even though he's not in charge of the economic strategy like Li Keqiang, he and his philosophy drives a lot of his team's direction. So on business regulation, it's difficult for me to imagine that we swing straight back to pro-growth. Be very careful about that. It's almost similar to anticipating a Fed pivot. A Fed pivot is not going to happen anytime soon. Just like a pivot back to pro-growth in China is unlikely to happen anytime soon. Now, on saving the real estate sector, I think that this forecast is a little bit easier to make. This is something that I believe Chinese officials will attempt to aid. Not because they want to help the real estate sector specifically, but because Chinese real estate is such a big part of household wealth that if they don't do something to stem the slide in confidence, that could weaken the overall GDP even further. So to understand Alibaba, Tencent, and Baidu, we need to understand the health of the real estate sector and the regulation landscape. In other words, we need to do a holistic and broad assessment to see the big picture. To do so, I took a look at Beeke Holdings. It's the real estate proxy of China. You can think of them as the Zillow of China. And they are number 6 on the KWEB ETF in terms of weight. So from the sell side, from Barclays, the sell side asked, what are your thoughts on policy relaxation? Policy relaxation meaning what is the government doing to help the real estate industry survive? And Beeke Holdings, which is directly in the real estate sector, they responded by discussing several key initiatives that the Chinese government is enacting in order to restore confidence. You can pause the video and you can read it here, but the bottom line is the Chinese government is in stimulus mode when it comes to helping the real estate sector. There is a lot of doom and gloom when it relates to the real estate sector, but there is support on the macro side when it comes to monetary policy. They believe that there will be stabilization of real estate home prices by the end of this year. Then there was a question that a lot of you are probably wondering about. It was from the sell side, from Citi, on mortgage boycotts, asking, could you provide your views on the mortgage boycott and has it impacted the company's business? And how do you view this impacting China's overall macro situation? Beeke Holdings, which obviously has greater line of sight and visibility into this than the ordinary company, said that They believe the Chinese government has sufficient capacity and they've got determination to resolve the issue. And they've already implemented various initiatives to ensure the project delivery. Now, of course, you want to match up the actions with the government's words, but as of what I'm seeing, this appears to be true, that there are various initiatives already taken to ensure project delivery. Here are some preliminary conclusions that I'm forming, broadly speaking, high level. Consumption names, Alibaba, JD, Meituan, they have the highest upside potential in the event of a loosening zero COVID situation. The downside for consumption names, in my opinion, is most likely another 10-15%. I think downside here is relatively limited unless EPS falls apart, which is unlikely. That's because Alibaba and JD, they beat earnings last quarter when lockdowns were more severe. Now, there seems to be more government stimulus on infrastructure as well as supporting real estate by cutting mortgage rates. So what does that mean? That means that there could be macro support for Beaky holdings up here in this number 6 weight for the KWEB ETF. That's something that I'm paying attention to. And then I also believe that it is likely that China will at some point reopen their borders, and this has positive implications for Trip.com over a longer time horizon. However, this is partially priced in. There was a recent Q&A in their earnings transcript that I picked up on where the sell side from Mizuho asked, what is your take on the reopening policy in China? Can you give a sense on once the border starts to reopen, how fast do you think the outbound travel will return? In other words, international travel. And Trip.com says that the trend has been quite positive. And as everyone observed, we started with 21 days quarantine and then was reduced to 14 days. And now it's 7 days in Hong Kong. It is further reduced to 4+3. They're indicating that the trend for international travel is starting to take shape, and that is why Trip.com has outperformed Alibaba, it's outperformed Tencent. I highlighted this in my mid-September report inside my community. The second half of September, as you guys know, has been very, very tough. But let's take a look here. What I said in mid-September inside my community. I said, there is the possibility, and this was before the earnings call, by the way, there is the possibility that international travel to China as well as domestic travel begins to improve after Xi gets reelected. Upon opening up domestic and international travel, this would eventually be a tailwind for Trip.com, which is China's largest online travel agency, as well as one of the top 10 components inside the KWEB ETF. And we can see here, I wrote, it appears that there are silver linings that will eventually help Trip.com and Beaky within the KWEB ETF be supported by macro. Alibaba, Tencent, Baidu, names that you and I heavily focus on, they will benefit too, but they will benefit from a secondary degree from the international travel opening. So key takeaway is this. The big sell, it has already come. The buying opportunities, those will also come. If people are looking for a big return in a short period of time, I don't think Chinese internet is appropriate for that. It's appropriate for long-term investors who are looking for deep value in a market that now has higher interest rates, tighter monetary policy, and a heavier focus on valuation. If that's your investment perspective, now Chinese internet looks relatively attractive, but you got to be very, very careful. Size it accordingly, size conservatively, wait for more clarity. It's okay to be a little late than to be a lot early. Make sure you've got that perspective down. Now, follow me on social for more frequent content. My email list down below, make sure you're there. My Twitter and my Instagram. Thank you guys for being awesome. Thank you to my program, Tigerway, for sponsoring today's video. And I will see you guys in my next update.